Hey everyone, it's Treanna with Remax of Princeton, and today I have a special guest with us, Dimitri. He's from Considine Insurance with Allstate, and we're going to be discussing a little bit about what the importance of homeowners insurance is. So let's get into that. Hey.
How are you? I appreciate you having me stop by. It's
Absolutely. Thanks for
pleasure.
coming.
Of course, of course.
So what would you say, some of the main importances are with homeowners insurance, purchasing a homeowners insurance?
Ideally, it's going to be lender approved. You need to have homeowners insurance to be able to pass closing. As you know, with most of your clients, the majority of people need to get through HUD. So once you get the HUD and the closing table, everything's clear. Right. This is a little bit further down the line from the realtor, but it is guaranteed, and more importantly, it's a necessity to go ahead and have homeowners insurance put in place prior to be able to put the house, be able to purchase the house.
Right.
Any lender is going to say if you have a mortgage, you're going to have
insurance.
homeowners insurance. There's no ifs, ands, or buts.
Absolutely, that makes sense. So basically, I guess that kind of answers a little bit of the question, like why they need it, why it's really important that they would almost need to purchase that to be.
Well, need and wants are two different things. But when you look at a need, you're going to take it as, well, my lender says I need this. This is just one of the 40 things I need when I go to close my house. Everyone else is pulling their hair out because they know they have to get this checklist crossed off. Mm-hmm. But whether you're dealing with a first-time home buyer, a second-time home buyer, or even a third, maybe someone who's more or less seasoned in this process, as a home being the biggest thing you're ever going to purchase, that's the first one, especially dealing with first-time home buyers. It's going to be the most memorable. You're purchasing the biggest purchase you're ever going to have to do, as a young adult or even adult. So you want to make sure that everything's done properly. Right. And in that instance, I think that dealing with a skilled professional, they can go over line by line and really make sure that the asset that you're purchasing is going to be protected.
Okay. So when do you think they should start to look into getting it when they're going to purchase a home, they're ready to start the home buying process? When is it important to kind of get the homeowners insurance started?
I think a lot of the times you don't want to be too premature, because a lot of the times with short sales, estate sales, or even a home that you're purchasing, you want to be able to get past inspection. Right. I mean, a lot of the times when you're past inspection, you're into the attorney review. You have that 3-day period where both the buyer and seller have that agreement to say they can back out for any reason. And being a realtor, I'm sure you had that time where houses don't always go through. So I would probably say shortly after the attorney review is when you should really, really buckle down and see what you can do. Now, obviously, what you're going to do is you're going to want to shop it. A lot of people are thinking that monetarily the best thing for you is to get you the best rate. But if you're dealing with someone that just sends you a rate and you really don't understand it, because like I said, when you look at those things line for line, you're not going to understand it. But you really want to be able to keep that insured and make sure it's in place the correct way.
Yeah, that makes sense. Okay, so typically how long do you think it takes to get a homeowner's insurance binder?
The binder typically will take just a few hours. If everything's in line and the policy's written the correct way, what we can do is we can have that sent over pretty much instantaneously. Now, in the realtor position, you probably won't see a copy of that, but we will go send it 2 different ways. One, we're going to send it to the financial institution that you're borrowing from, because they're going to want to make sure one of 2 things. One, is it paid, or is there a paid receipt? Or 2, is there an invoice that you could pay at closing? Now, ideally, those are the 2 routes that we send for the lender. Now, on the mortgage representative and the insurance representative both are in contact. They're pretty much doing whatever it can to be seamless for the insured.
Yeah, and I also heard, in part of that, you mentioned about the closing. So I had another question I wanted to get into about that. So do you pay the homeowner's insurance at closing?
You have 2 options. Now, and I'm going to go a little bit more in depth about that. Me, as the insurance representative, I give my clients 2 options. Now, if the lender has something in place where it says I'm mandatorily requesting that they include the payment prior, then that's fine. Now, for my clients, and probably for you, because you see the homes, they do take a little bit longer than expected. Right. So if they're saying a 30 or 60-day closing, sometimes it's a 75 days. They pretty much were going to get it done before the rate lock. You know what I'm saying? So in that instance, on the homeowner side, I have the option to be able to COD it. Now, I don't have to request any payment because I want to be able to assure that my client has the option. So if I send it to closing with an invoice, I like that option the best. Now, ideally, I'm going to eventually get paid. I'm getting paid from either the title company or the lender. Right. So it's a guarantee that I will be paid. But a lot of the times when you purchase a home, you have the ability as the seller or the consumer, and the buyer in this instance, to be able to obtain concessions. And what concessions is the event that the home says, I'll give you $5,000 in a retainer that they're going to put towards your closing cost. Well, we both know that you have to pay your first year up front. So if I can take out $5,000 and I can't pull any money from HUD, then I need to be able to take $1,000 of that to go ahead and put it towards the homeowner's insurance. Not only that, but you have a 3-month escrow that you need to put into. So it just gives a little bit less of a financial burden on the client in the event that I can send it. It's pretty much utilizing money that you can't obtain or pull from HUD, which obviously was passed probably sometime about 18 months ago.
Interesting. Okay. This is all good information to be learning about. So I guess maybe that can kind of get us into if the insurance is included in the mortgage payment.
Chances are, and most financial institutions are going to set up for first-time homebuyers or first-time lenders an escrow account, and ideally that's just to ensure that the next year is possibly paid and the next year is possibly paid, and so forth. Very rarely, and even the smaller lenders, they don't even require something that would be a non-escrow account. It's not until day 365 where you actually earn the right to request a non-escrow account, and that's just showing 12 months or 18 months or 36 months of continuous coverage and continuous payments that will show that this lender is going to go ahead and trust this person to be able to go ahead and make that payment. And how escrow works is this. We have a 12-month period where you're paying 1/12 every month in the mortgage. So then that guarantees that the next 365 set of days is already paid in advance. Sometimes with inflation or with insurance increases, we do see a little bit of an increase. With that, it's going to be a 3-month cushion on your escrow from your original closing date that they have there to put in place to pay it forward in the event that they are a little bit short. What happens is, and a lot of the consumers, and what you want to be able to make sure is that your client doesn't fall in what's called a shortage. And in a shortage, because what happens is you're not just behind what you owe. You're behind what you owe, plus you're behind what you are in that cushion.
Yeah.
So now you're back $600. Now $600 over the course of a 12-month amortization, you're looking at about $60 a month that your mortgage could go up. Now, a young first-time home buyer, a young couple, or even a seasoned couple that's been married, this is their second home, $60 when you have a mortgage, children, daycare, everything else, public service, waterworks, whatever it may be, $60 is going to be a little bit of a hard pill to swallow. You don't want to be able to put that on your client and not really explain that to them in the forefront, and that's why it just makes sense to always deal with a professional.
And I know how we're speaking about like first-time home buyers. I just have like a question. Is your specific? No, I thought of something in my head. What benefit would you say with your company that you guys may have to offer to first-time home buyers? Anything special for that?
Not necessarily something special, but we tailor each individual client's policy based upon their assets. The liability is going to meet requirements that they personally have and assets that they have obtained in the previous manner. Now, in this instance, the only thing that I could probably think that would come back is that you're not really dealing with someone at a 1-800 number, or most of the major companies that you have auto insurance through, they don't generally have a homeowner's insurance. So in order to keep that business, they sub it out. Now you're dealing with a third party where you have to be transferred. You're never really dealing with the same person. And we all know that when you purchase a house, it's your biggest purchase.
Yes.
But you really don't understand it. You're at the point where you're not a professional. You're also not, you haven't done this before. So you want someone that has been there, that's been to closing, that understands what needs to be done, and that's going to walk you through it. You don't want someone that tells you. You want someone that explains it. You want to have a better understanding because you need to be able to have it.
Very similar with real estate. You want someone who's going to go through the entire process with you from start to finish.
Sure.
And just, be there for you.
Exactly, and that's why you're here. You know what I mean? That's why it's the good way to do.
Okay. All right, let's keep thinking. Oh, that's a good one. Is home insurance payment tax deductible? You know anything about that?
Yeah, sure.
Okay. All right, so I want to get into a little bit with this. Is the homeowners insurance payment tax deductible?
That's going to be like a two-part question. So when you look at taxes, you have the ability that when you own a house, all the mortgage interest and then all of the taxes, you're going to be able to claim on your homeowners. Now, you're going to be able to do that same thing when you do your W-2. When you put all that in, you have the ability to get back about 15%. Now, I think that's the rough estimate in the state of New Jersey. But yes, all of that or anything that you're paying out would be the taxes to homeowners and the mortgage are all going to be the mortgage interest would be tax deductible.
Okay, very good. So when we kind of spoke a little bit about, the closing idea, but are there any advantages or disadvantages of paying the insurance up front versus at the closing?
I wouldn't say there would be either, advantages or disadvantages. You could do either. The only time that, again, I'll touch base on this again, in the event that you have a lot of concessions, sometimes when you purchase a house, and let's go ahead and discuss this, when you're looking for a house for one of your clients.
Yes.
The main goal is to get them the best house for the least monetary amount, and the one where they're going to make the most money.
Absolutely,
that makes most sense.
Yes, the best investment, and that's why, resale value, everything.
That's why they come to you, because you're going to be able to get that done. They're not doing a for sale by owner. They're not trying to represent themselves.
Right.
Is they're dealing with a professional.
Absolutely.
So when dealing with a professional, you know that you're going to do that. So when you go ahead and set negotiation, the first one never really happens. It's usually the one that's forefront.
Yeah.
The second one or the third one, depending on how hot the negotiations are, you're going to be able to say, well, listen, I'll come in at this price, but I want $10,000 in concessions, and maybe that happens.
Yeah.
Now we both know, depending on the size of the house, about $10,000 in concessions, you're in the $400,000 range. Right.
Typically.
Now we both know that at HUD, the buyer cannot pull any money. If the money is not used, that goes to the air.
Yeah.
So if I have the ability to use up $1,000 or $1,200 or $1,500 for homeowners insurance, of that $10,000, why would I not do that?
Yeah.
Why would I take my own money?
It just makes sense.
Yeah, the financial burden is already strong enough. We are now, the buyers, one concerned about, hey, how's this happening? How am I getting the money? Where am I pulling this from? But if they have the ability that $10,000 has the ability to give me $1,000 back and pay my first year, that's literally free money. It's negotiable because you got them that deal, and then you basically represented them to be able to pay their first year of the homeowners insurance.
Right.
So that would be the advantage. Disadvantage, don't deal with a professional like yourself and then not know what to do.
Yeah, exactly, which is definitely not the way to go.
Absolutely not.
This is another question. Can I change my homeowner's insurance company at any time?
You absolutely can. Now, in this instance, chances are we're not going to be dealing with that. With the partnership that myself and you and your partner have, we're not going to ever see that.
No.
But the homeowner's insurance is a legally binding contract that can be canceled at any time. Now, the Department of Banking and Insurance gives you the ability to cancel that policy premium at any given time, with the amount of return premium that's based on a prorated amount to return to you within 7 business days. So with that 7 business days, in the event that you were paid up 3 months, you paid up 12 months, but you used 3 months of the premium, we know that in 7 days you're going to receive a 9-month payment back to you. Now, in the event that it gets a little bit more tricky, the 9-month policy payment needs to be given back. Well, you're the insured, and there's an insurable interest with the lender that's going to be listed on the declarations page. That 9 month of premium gets returned to the borrower. In the event that the borrower does not return that back into the escrow, they're going to have a 9-month shortage. Now, they have the ability to do so, collect that money and keep that monetary amount in their pocket, or dump it back in the escrow, continue to keep their homeowner's insurance and their mortgage payments on an equal basis, and then they'll be fine.
Okay, well, we should not be having those issues anyway, but it's just good to know, for everybody to understand a little bit more about. All right, so now we're going to get into something a little bit, hope, God forbid, whatever really happened, but, it's good to cover the topic anyway. So, what happens to the mortgage if, let's say, a house burns down?
Well, right now, when you purchase an insurance binder or an insurance declarations page, it's just a piece of paper until you need it. Now, majority of the time, you're not really going to put through big homeowners claims. In the event that they're in a smaller amount. Under $1,000, you're pretty much going to wash it. You're going to take care of yourself because you don't want to see the increment that go ahead and gets raised at the end. Let's go ahead and say that it's a total loss. Your house is completely destroyed. There's many parts to the homeowner's policy that get taken care of. We're going to start first about the dwelling. The dwelling amount is the outside protection or the home protection for the entire structure. Now, you're going to get that plus a 25% building and alterations fee. Okay. So you're going to have the total amount plus the non-depreciated value of the home because you're going to get that back. Well, we know that we need to rebuild the house because that's going to rebuild the house. 2, the other structures, that's a fence, a deck, a pool, a detached garage, whatever it may be. The other structures, an automatic 10% coverage that's going to go ahead and put in place to cover that and all the structures on the land that are attached to the home. The third would be your personal property. And let's go ahead and take this. Let's look at your Louis bag over there. If you were to take your Louis bag and dump everything outside of it, there's probably a lot of stuff in there.
Yeah.
Right?
Yeah, definitely.
That's your personal property. Your couches, your clothes, your sunglasses, all the nice things that you like to
wallet,
wear.
everything.
Everything, right? We need to make sure that that's going to cover. So now you're going to get a check issued for all the personal belongings. A separate section to that's going to be your scheduled property. You know, rings, jewelry, Rolexes, you know, whatever it may be that you scheduled to the non-depreciated value or the appraised value. We need to make sure that's taken care of. Now, the one that's probably most important is going to be loss of use. You know, you have a family, right? Now imagine if you, your sister, your mom, your dad, you know, your house burned down. We know that you're not going to have another house to live in, and it may take 12 months to rebuild your house. The insurance company has any coverage in place on the policy that says they're going to go ahead and put you in a nice home or rental home with an abundance of amount of money to be able to keep you and your family under one roof and while your home's getting built, so that you don't have just a catastrophic devastation, but a financial devastation, but more or less your family kind of sticks together, and we want to make sure that that stays the same.
Yeah.
You know what I mean?
Yeah, that's very, that's
on the
great.
streets.
That's a very good, valuable, valuable part of your company. I will definitely say that. So if the house is completely destroyed, do you still have to pay the mortgage?
Well, the mortgage is essentially going to be paid. Now, ideally, that's going to get paid from the insurance to the mortgage company, but you can't just say if the house goes down on fire or whatever, there's still the land. The mortgage is on the land as well.
Right.
They're going to go ahead and all the coverages I just spoke about previously are going to go ahead and put everything in place to rebuild your house the way that it was in the same likelihood that it stood before. And now the mortgage essentially is going to continue to be paid on that other one. Now, in the event that I can't think of an instance where we would actually pay the mortgage company back, but the reason why the mortgage lent you the money and allowed you to do that is because you had homeowners insurance that had them as an additional insured, showing that they would be paid in the event of a total loss. So that's all kind of like, dotting your I's, legal documents behind it, but that's why it's so important to have it.
Yeah, absolutely. All right, so Dimitri, tell us, what is the value that you can bring to our clients?
Well, when dealing with clients, we need to make sure that their process for them is streamlined. We want to make sure that they are not ever left in the dark. One, their questions, two, their concerns, but more or less, we need to make sure that what they're looking to do, and the main goal is to purchase this house, get through closing, and get the keys to that house. When dealing with a professional in both the realtor position, the mortgage position, the title guy, and now the insurance guy, you have a team, and a team that we work with make sure that the client doesn't have to deal with the hassle. We're professionals that communicate on a higher level, that we're able to go ahead and make sure that the client is serviced in the proper manner.
Absolutely.
Now, in this instance, when you go ahead and have one of your clients and you take them out to see the house, they want to be able to get the house for the best rate. Right?
Yes, for the best rate, best price. I mean, like, the most important thing I would definitely say is having that team of professionals on your side. Like, how you said we work with everyone. We work with lenders, attorneys, inspectors. So it's definitely very important to have those strong contacts to be able to give to our clients. So I would definitely say that working together as a team of professionals is beneficial for everyone that we work with.
Sure, and
from start to finish.
And the reason for that is not always about price, but about service. You want to be able to make sure that the know, like, and trust is there. Now, in the event that you deal with a client, they know that they particularly like dealing with you. And the reason why they like working with you is because you have a team of other professionals to make sure that everything gets done the best way.
Yeah.
You know what I'm saying? You found them a great house.
Yeah, exactly.
Now,
that's the first step.
Let's protect that great house.
Yes.
But let's go ahead and not make sure that the client has to deal with anything that they typically just don't know.
No.
They typically wouldn't have any idea that would help.
Exactly. If they don't, if they don't know anything about it, we do. So that's what we can bring to them, and as a team, it definitely works. I think that that's a great benefit right there alone, is to just have those people that will service your client the right way.
And I don't think there's a better team than us.
No, absolutely not. So I think we covered a lot today. I think we were very productive on the topic, and I think everything went great.
I appreciate it. Listen, I can't thank you and Soumen enough. I think I had a great time here.
Of course.
More or less, I can't wait to start our partnership and make sure that all the clients are taken care of. I think that we went very in depth about questions, but but we're not going to limit them there.
No.
I think that if there's more questions that are detail oriented, specific to the client, and they have any questions, they can certainly reach to us on the comments.
Definitely.
Whatever they need to do, but more or less, I I can't thank you enough.
Yeah, and thank you for coming. It was a pleasure having you, and I'm really looking forward to, working together in the business. So if you guys want more information, definitely subscribe to the YouTube channel, and I hope you really enjoyed this podcast. And once again, our lovely guest, Dimitri here.
Thank you so much.
Thank you for watching.